We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisade's Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Charles Nenner, president and founder of the Charles Nenner Research Center. How are you today, Charles?
Okay. Good to be back.
Excellent to have you back. And of course, your work is very focused on cycles. So we're going to talk a lot about how that comes into play, how you see all these things progressing today. So, on the show, we focus a lot on commodities because of how they play into many of the costs of living. So why don't we start with how you saw the commodity cycle, let's say, developing in the past 2 years and what you see ahead for commodities?
Well, commodity cycle is a very regular cycle. So we predicted the inflation. Actually, we thought we'd go to 11.5%. We missed it. And then the cycle came down, and it's down into the middle of February. Just when we're speaking, Biden and friends are just saying how great they're doing because the inflation is less. Well, the info big surprise starting by the middle of February because the whole thing is going to shoot up again. They have actually no idea why inflation came down, but it's just based on the cycle. The crude came down, the natural gas came down, the grains came down. And as you know, my work shows that things move in cycles and they're predictable. So when prices go up and when prices go down. So we're in an inflationary period that will take at least 30 years. So we're just at the beginning.
So within that, let's say that 30-year inflationary period, there are going to be other cycles that take place. Is that right?
Right. So it's the same thing as a bull market that started in 2009. But in between, you got shorter term cycles, which within the longer term up move, make small bear markets, and then we go up again. So even in wars, you have it. Like now we have some cycles in war between Russia and Ukraine going down. That's why I predict it will be quiet for a while. And then from the middle of next year, there's going to be big problems, probably not only in Ukraine, but probably also in other places in the world.
Mm-hmm. So are there particular timelines that say work better for you, or is it just let's say analyzing the cycles as they work, and that is really how you predict based on the past?
Well, we proved it's not only the time, it's also price target. So if a commodity goes up, we can predict how high it will go up. The interesting thing is at the top there will come out some fundamental issue or an article or something going on in the world. And then everybody says, oh, now I know what came down. Actually, it's nothing to do with it because the cycle was already topping. Mm-hmm. And I usually give an example. If we own IBM and IBM goes up from 100 to 150 in a year, 2 years, and IBM comes out with a great quarterly number, then IBM goes up and the Wall Street Journal will write, well, people poured into IBM because they do great. But what if the cycle turns down and they have still great numbers? So then it has to come down. And what does the Wall Street Journal then write? Well, people took profit because they don't think IBM does better next year. Which means is even if you know the facts, but you don't know the interpretation of the facts, it doesn't help you very much. Mm-hmm. And the cycles predict the mass psychology and an interpretation of facts.
So in a way, it's really a dispassionate analysis of how all of these different markets are working, right?
Well, the assumption is things don't move at random, because if they move at random, you have nothing to check. So you have to take the other side that don't move at random. And now you're going to study if they don't move at random, can I find the underlying laws of nature?
So, you mentioned, as part of that commodity complex and part of the inflation picture, let's say the crude oil cycle, did that come to an end, that particular cycle come to an end at the end of November? And what's ahead for oil?
Well, the daily cycle was down, but we're talking now the 13th of December. The next short-term low is the 16th, and then a more interesting one on the end of the year. And then the crude oil starts going up again. Now, we're probably going to hear what triggers it. I give you an example. When the OPEC was very very strong, and I was working at Goldman Sachs, I could predict what they're going to decide. How did I decide? They came together in the weekend. So how could I decide? How did I know what the big guys in Saudi Arabia, etc., were going to decide? Because I knew what the price will be on Monday. So I know what they're going to decide, more or less oil. Now, they have the illusion that they have free choice. So the question is, do they have free choice? Because we already know what a no free choice is. Mm-hmm. Now, this has to do with timing. Let me give you an example from a soccer game. Or you're American, right? Maybe basketball game, but let's take a soccer game.
Canadian, maybe we should go hockey.
Hockey.
Even though I don't play hockey.
The guy goes to the goalie, and he can make a goal or not a goal. So let's say he made a goal, and now you see the rerun. So you know already he's going to make the goal. You can predict it, but he still had free choice to make the goal or not. So this is a very complicated philosophical issue. And what the cycles actually do is they can change the time frame so that although people have the free choice, we know what their no free choice is. So we leave them with the illusion. Maybe you can understand that if billions of dollars and billions of people are in financial markets, they neutralize each other. They all read the same news. They all look at the same things. So they think they make up their mind. People who work for me speak to clients sometimes, and they have an idea. And then they say, well, if you know something nobody else does, maybe. But you really think you know somebody that nobody else does? So it's all an illusion that you know something because it's already in the price.
Mm-hmm. So Charles, as part of that, let's say, inflationary picture that we're going to see kind of picking up next year as well, does natural gas end up really following the crude oil price, or are those cycles much more separated than one would assume, considering the related nature of these energy sources?
Well, like we said, this is already fundamental. Well, like we said, is in the middle of February, the longer-term inflation cycles are turning up again. And then, of course, crude oil will go up, natural gas will go up. Is it based on facts, or is this based on people, let's already sign contracts because next month is going to be on a higher level, so that enforces the inflationary spiral? Mm-hmm. I don't know. My work is to know if it goes up and how much it goes up, and when it goes down, how much it goes down.
Mm-hmm. So, based on the costs of all these things, does inflation work based on these cycles as well?
Perfectly. We follow the Goldman Sachs commodity cycle. I publish it every Sunday, mm-hmm. what a cycle looks like. And I even talked about the Fed funds that are not going to be as aggressive anymore because we're going to have a lowering in inflation to about 7%. If they would have good cycle work, the Fed would not make a mistake to continue to be aggressive. But it seems they go from months to months. It says, oh, there's less inflation, so let's just go up 50 basic points, not 75 basic points. And then they're going to be caught, red-handed, or how you call it in Canada, in March, April next year.
Mm-hmm. So, you recently did a study of those Fed funds rate and predicted based on the cycles where the markets could conclude that the Fed might stop raising rates. So tell us more about where you see that point might be.
Well, that point was like a month ago because we hit the cycle low for the moment. Mm-hmm. It doesn't mean they cannot do another 50 or 25%, but the cycle low means that the impression of financial markets is that they're not going to be that aggressive anymore. And now it makes sense because the inflation is less. And now they have a reason, so-called reason, to be less aggressive mm-hmm. until the cycles goes up again, and then they're going to be more aggressive again. So the cycle actually predicts the interpretation of the facts. So the Fed can be seen as lowering rates or not lowering rates, even if they don't do anything. It still influences the market because of the perception. Mm-hmm. And cycles predict what the perception is going to be. So again, the facts are not always that important. The perception of the facts is more important.
Yeah, that's a very important point. And, at no time is that, let's say, more prescient than this week, considering, again, we're speaking on Tuesday, the 13th. So the Fed meeting is tomorrow. And, it matters so much to the market how, what the interpretation of every single word that Jerome Powell is going to speak, how that's interpreted.
Right.
So, Charles, how do you come up with, let's say, buy signals? Does momentum play into it, or is it just really at the extremes of your cycles? That's how you base your trades.
So let's take as an example IBM. Let's say IBM shows or projects a low by the 23rd of December, and it came down for a while and has a price target of 121. Now, mostly these things come together. So you almost can bet on that the December 23rd, the target is 121. So it confirms each other. So then we get a buy signal at 121 because the cycle is bottoming. Now, I almost never saw markets go against cycles. Beginners don't understand that if the cycle is up, it doesn't mean that IBM is going to shoot up immediately. It just means it doesn't go lower. Because how come already for a couple of weeks the cycle is up, but at least it doesn't go lower. So you used to have Marty Zweig, maybe the older among us know that guy. He was a great investor, and he had the sentence, "Don't fight the Fed," and we say, "Don't fight the cycles."
Yeah, that makes complete sense. If you have the ability to see where these cycles are and, let's say, backtest them to have some confidence in them, right?
Right. So people seem to think, sometimes I tell them, when you went to high school, you learned that if you shoot a bullet in the air, how long it takes for the bullet to come down and how far it goes up. So there are calculations in nature. Now you have to make a decision if those calculations in nature don't apply to financial markets. Now, if you say they don't, again, you don't have to look into it. You'll be surprised what you find once you say, let's take a look.
So, Charles, if you could give us an example of when you saw a cycle or a market go against a cycle, if you could.
I haven't seen, listen, we have different cycles. We've got decade cycles, yearly cycles, monthly cycles, intraday. We have an intraday service that can say the S&P bottoms 10 minutes after 9 and it goes up to 3:30. And it will go at 3:30, it's going to be in this and this level. In the intraday, it can be off 10 minutes. When I was at Goldman Sachs, they did some research and they did it as follows. They said, if he's wrong less than 48 hours, we consider him to be right. And if he's, let me try to remember, and if he's wrong less than 1/4 of a percentage, we consider him to be right. And we were right 98, 99% of the time. So we have then a window of 48 hours.
So, Charles, how does the Baltic Index play into signals within the economy?
Well, as you know, the Baltic Index is predicting what's going on in the economy. And the interesting thing is I published it, and in 21, in August, it totally dropped dead. And it was exactly when all the insiders started selling. How did they know that? That's beyond me. I have no clue. But usually when the Baltic Index stops, the market stops. Again, you must be a deep insider in order to have your hand on those freights and whatever's going on to predict an economy from there. So I can only do cycles. And again, it's expectations, because if you think the prices go up, then you might sign a contract early, and that will bring prices up by itself. So we do the same thing for big import and exporters, let's say, of orange juice in Florida. So the guy has oranges. Now, he already knows that he's going to have a new crop in 1.5 years. But when is he going to sign the contract? Or McDonald's has to know, live cattle, when do we sign for the meat? It's a huge difference. So everybody uses the cycles in order to have a big advantage. Or firms who do cocoa or chocolate, they need cocoa, they need sugar. There's no end to it. If you say, well, I'm going to just sign, I make chocolate and I'm just going to sign whenever I want the sugar contract, that's a bit stupid if you know it's going to be 20% higher in a week. So the big guys use all these cycles in order to have a big advantage. And to my regret, the smaller investor still doesn't understand how it works.
Just the idea of cycles, or the idea of people signing contracts early? What do you mean exactly?
No. Cycle. The fact that these things can be calculated, as you
Right.
know, or you maybe don't know, we have a 30-day trial for free just to see people that can see how insiders make their money.
Mhm.
And what I tell people is we give out research, I think maybe 20 different markets that is like the VIX, S&P, NASDAQ, gold, silver, crude oil, NASDAQ,
Mhm.
yen, whatever there is. Just write down what we say, the date and the level, and just look after a week if it was correct or not. And if it's correct, try to open your horizon and say, how's that possible?
Mhm.
Probably things don't work the way that I'm being told how they work.
Mhm. So, because of that, or let's say to do with the Baltic Index, what does that mean for the S&P and the NASDAQ? Do you expect to see, more further dramatic downside days for the indexes, or do you expect more grinding downside pressure?
Well, this was one of the bounces we expected. I wrote about this because newcomers, and who is not a newcomer because I haven't seen a real bear market for many years,
Mhm.
that in bear markets you have bounces of 10, 20%, and then it continues down again. People also don't have an idea that the real bear market is over when the price earning is 5, 6, or 7. People don't remember when it was already around 16, 15. They say, oh, it starts to be cheap. So that's why I try to educate that it's very normal to have a bounce of 15, 20%. Don't get drawn in
Mhm.
because the big guys will use the bounce in order to sell more. And so I try to explain how bear markets work. So this thing is going to be bad next year again.
So, Charles, what would confirm a new bull market for gold and silver to you, and what time frame does that cycle work on?
Well, the cycles have to bottom. The weekly cycles didn't bottom yet. They can take till early next year, and we're definitely going to have a big bull market. It's just hanging around, and we're trading around the short-term cycles, which is very profitable. It's $100 up, $100 down. So you don't have $500 up, but if you have 10 times $100 up and down, it's also good.
Mhm.
But you're definitely going to be soon. You're going to see a bull market. It's just worthwhile to check. I think it's going to happen within the next 4 weeks. So please check the research. It's not going to cost you anything, and then see when the cycle's bottom, and then the bull market starts.
Mhm. Do gold and silver play different roles to you, Charles?
Well, depends. If I really like my wife, I go into gold for her, and otherwise silver. But for the rest, no, it doesn't make any difference.
So for you, it's just a trade either way.
Yeah, it's just a trade either way. Like corn, soya beans, we do wheat. I couldn't care less what it is. That's how it works.
So you have a dramatic long-term chart of the 30-year bond on your site, continuing down for nearly 40 years, and only recently breaking that trend as interest rates have been raised. So does this trend line need to be tested before continuing to the upside?
It can be tested. And that's one of the things I try to teach. Don't be surprised. Only 50, 60% of the time it's being tested and then it fails.
Mhm.
So I wrote that when the bounce of 121, we're going to have a bounce that could go to just below 139 because that's where the trend line is being tested. If you're a good long-term investor, you just stand aside and you wait what happens at 139. Based on cycles, I'm convinced that we turn sour again and interest rates are going to shoot up again.
Charles, I've heard you say recently that you're expecting a serious recession combined with inflation. So is this due to the rise in interest rates and that it's taking its time to work through the economy combined with the debt?
Well, not only the debt, there is, they have been screwing up so much the financial system because every Fed president says it's going to come down, but not in my lifetime. So it started already with Greenspan. Let's put in the money. They call it the put of Greenspan. Now, there was some very neutral indicators. And one that's very neutral is what's called the Buffett indicator, where Buffett calculates the total capitalization of the markets compared to GDP.
Mm-hmm.
And it's totally overvalued, totally. And the other one I like to use is that I give the example, if you go to broker, he says, well, should I buy it in stocks? He says, well, Stocks go up an average of 7% a year. Well, that's true if you start from 1900, but if you draw a line with the angle that goes 70%, 7% a year, we're about 70% above that line. So actually, in order to get to the median, we have to go 70% below the line.
Mhm.
So that times when you want good to buy stocks, and at times when it's not good to be stocks. And even after this weakness, everything is overvalued.
Mhm. You mentioned the war cycles earlier. Does this geopolitical situation, work based on those cycles as well? And do you expect more turmoil coming into next year?
Well, as I have been explaining, I started 3,000 years before Jesus with the Mandarin Empire,
Mhm.
the big cycles. And for people who want to check if there's such a thing as a war cycle, there's a very simple war cycle that's 100 years.
Mhm.
In every second decade of a new century, there's a war. So that's why we have a war now, which I predicted already in the media 15 years ago. And if you go back 100 years, you have the First World War that was continued in the Second World War. And if you go 100 years back, you get Napoleon who tried to conquer Europe. If you go 100 years back, it's called the Habsburg War. And the interesting thing is if you Google major war around the year 500, 600, 700, 800, you see that every 100 years, in the second decade of a cycle, there's a war.
Mhm.
Now, don't ask me how that works because I don't know. But try to explain to people that I'm not an economist, I am a medical doctor. And an economist, and I had big discussion, maybe people remember Abby Cohen from Goldman Sachs. She could say, people are wrong, my system is right. Is that in the meantime, everybody's losing its shirt. That was in 2000, 2001.
Mhm.
So I'm a medical doctor. If they say the red pill works, I give the red pill, even if I have no clue how the red pill works. So I have no clue how it works,
Mhm.
but it works. And I took it upon me, to forecast markets. And exactly how everything works, I have no clue.
Mhm. Obviously, for gold and silver investors, it seems like one of the biggest contributing factors to the gold price on days, especially like today, is the dollar. So what timeline cycles does the dollar play on, and what do you see ahead for that?
Well, we had on the dollar index, we had a target of 114. It hit it, and since then we see weakness, and the dollar's not going the rally for a while. It's not so simple. I know the rumors are that there's a connection, but if you take a long-term dollars chart and a long-term gold chart, it's not so simple to say when a dollar goes down, gold goes up.
Mhm.
Same thing with inflation. Oh, gold goes up with its inflation. Well, most bull markets in gold were in deflationary period. It's just that we don't remember. So if you have a deflationary period and there's nowhere to hide your money because everything goes down, then people also buy gold.
Mhm.
But again, that's fundamental. I taught myself the fundamentals because I come from medical school, but I don't think I know better than other people. So I don't deal with it most of the time.
Mhm. Charles, we've obviously seen a very dramatic rise in debt. And if we combine that with looking at some of what's going on culturally in the US, does this mirror another cycle in history?
It mirrors another cycle in history. And as you know, I gave the examples again. Today, the Biden signed the, I don't know how he calls it, respectfully marriage situation that anybody can marry anybody if they want to.
Okay.
And they're very busy these days. If what's a man, what's a woman, into which bathroom you go. And as an example, I always give when Rome was burning, then the senators, instead of taking care of Rome surviving, they had weeks of discussion if angels are feminine or masculine. So that really reminds me of what's going on. And all the signs that we see, what brings about the end of major expansion of countries is going on in the United States. It's civil unrest. It's a middle class that's destroyed. It's a big budget deficit. They have to pour in money because nobody wants to do anything anymore. They want to have free money. And that usually is the end. Not that it ends tomorrow, but that's usually the end of a big society. And what I think that we're going to have these major wars on several fronts. I think Iran is going to attack Saudi Arabia. I think North Korea at the same time is going to attack South Korea. I think China is going to attack Taiwan. And then Putin will take advantage against the NATO. and they will just be paralyzed in the United States because how much can they spread out? They can't do anything. Mm-hmm. So the balance of power goes totally against the Americans.
Charles, I've heard some people say that cryptocurrencies haven't really been around long enough to properly chart. So for some of those systems, does that crypto analysis, do the cycles work on that crypto analysis, let's say for Bitcoin and Ethereum?
Well, if you go to my website, you see that our track record, and the track record is an official track record, is a firm in the United States who watches every trade we do. We're up 250% more or less for the year. And cryptocurrencies are the easiest thing based on cycles because there are no fundamentals interfering. It's not that every other day there's a news item. So it's all emotions. So this has been very successful. And it's all the same system that we use, but cryptocurrencies are the easiest thing to forecast.
Charles, do the cycles apply to basically anything, or, let's say, are there any examples of your cycle theory that apply to other things than just the financial markets? Yeah.
For instance, we have a big client in Hong Kong that has to know where the fashion is going in 2 years. He can prepare himself. So then we built the cycles based on the last 100 years. As a gentleman, you had single-breasted, double-breasted, it always comes back. You just never thought about how much time in between it comes back. Because if you would know, that in 1, 2, or 3 years you have to sell double-breasted again. Mm-hmm. No, nobody thinks about it. We also work with the record companies. If they have the issue a record, it's important to know if you do it in the winter, if you do it in the summer, if it's a women's voice, it's a man's voice. There's a lot of research that goes into it in order to be successful.
Excellent, Charles. Well, was there any other markets or examples that you can think of that you'd like to go over before we wrap up today?
No. Again, nobody has to sign up with us, but just go on a free trial. If you go to the website, charlesnenner.com, it says free trial. Look for 4 weeks how we do it. Mm-hmm. It's just that I like to explain to the world how things really function. Maybe we can make a better world like that.
Excellent, Charles. And of course, your Twitter handle as well is @Nenner Research. Charles, thanks so much for your time today.
You're welcome. Talk again.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.